All right, we're live. Hello, I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is a live stream. It's about personal finance, investing, the stock market. It's really about helping you make better financial decisions. So we talk a lot about, obviously, we talk about money, but specifically, we talk about the economy, the stock market, jobs, you name it. If you think about how many financial decisions that um, that we make in a day, it's really incredible. And just pretty much every decision you make has something to do with money. Whatever you want to do, the money equation comes into it. Rich or poor, middle, everything we do, there's a money component to what we do. So being good with money, with with personal finance, uh, it's just I can't overestimate it how important it is to watch this show. Okay. So yeah, it's can't tell you how important it is to watch the show. Yeah. But that's what we do. We talk about personal finance, we talk about money, and we talk about the markets, we talk about the economy, we talk about a lot of things, getting you ready for things. Like one of the things we talk about is if you're worried about a slow economy or a recession, what are you doing to make yourself more valuable in the workforce? There's lots of things you could do. I mean, doing a good job at your job is important, but there are things you could do to make yourself more valuable to a future employer if need be, or to your current employer, which you should always do anyway. Um, I have employers. Yes, I own my own business, but my clients are my employers. So I always have to keep up with the latest. I want to be ahead of the latest. I want to be leading. I have a lot of bosses. Someone said to me before, "Oh, the beauty of it is you can just leave whenever you want." No, it's I opened up my own business so I could work 24 hours a day. Didn't you know that? No, there is a good quality of life issue because I do get to sometimes pick and choose the hours I work. Anyway, we're going to talk about a couple of things today, but a day like today, an explosive rally in the major averages, the stuff that was pounded the most in terms of stocks went up the most. Days like today is the reason why I always say don't make the all or none decision. I'm getting all out of the market. I'm going all into bonds. I'm going into all cash. You really need to take a more balanced approach. Days like today are days why you are invested. And we had some huge news today. The Federal Reserve Chairman Jay Powell spoke at the Brookings Institute, and it was a very highly anticipated speech. And where it was expected that he would give us insights into his thinking about his plans to raise rates, to slow the economy, to bring down inflation. And the hope was, and we spoke about this the last few days, we spoke about it yesterday, is that he's going to say, we've had enough, we've raised rates enough, we're going to slow or moderate the pace of hikes. He's not saying that he's going to cut rates, but we talked about this. I've said this to you before. I think we're doing a half a point in December, the December rate cut coming up, and then a quarter point after that, and then the Fed pauses. It's astounding how much the Federal Reserve has raised rates, and we've lived to tell the tale. Now it takes time for interest rates to work higher rates to work their way through the economy. So that's why a lot of people are talking about a slowdown or a recession in 2023. We might not get a recession. What I've been saying is we probably already had it. We're probably coming out of it, if not out of it altogether. So let's not get too negative. Let's roll the intro. We're going to talk about these things. If you have any questions, a little banter, you want to talk about this stuff, hit me up in the comments. Ask away. I love hearing from you. And while you're watching it, if you wouldn't mind, give us a thumbs up, a heart, an applause, whatever reaction, maybe a wow, whatever reaction is available to you, depending on which social media platform you're watching. You see these over here. And here we go with the intro. All right. Thank you for joining me today. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. It's a live stream show about helping you to take control of your money because it's very easy for your money to take control of you. So, first on the docket is Fed Chairman Powell. We may be at or very close to the end of his interest rate hiking cycle. That is phenomenal for stocks. That's a good thing for the market. All right. Inflation is not a good thing, but the Federal Reserve has the power to move markets based on its interest rate policies. So if the Fed says now that they are almost done raising rates, they want to moderate the pace, slow the pace. Okay. Those are all good things. So I want to just show you what's going on quick in the major averages. All right. So the Dow is up over 700 points. The NASDAQ was up almost 500 points. That's a huge, huge move for the NASDAQ. It's a 4.4% jump. S&P 500 up 122 points, over 3%. Gold had a decent day. Oil had a decent day. The 10-year yield went down a little bit, but the 10-year bond went up. So that had a decent day. And the VIX continues to hover the low 20s. So good stuff here. Let's just run into crypto for a second. Crypto is moving up. And I said to you yesterday, crypto is stabilized at 16,000. I'm talking Bitcoin, stabilized at 16,000. And it's Bitcoin is like a supercharged version of overpriced stocks of the NASDAQ. I'm not saying the whole NASDAQ is overpriced, but there's a lot of froth in the NASDAQ. It came out. But when the Fed cuts rates or lowers rates, what we consider to be highly valued stocks could go up a lot. And that's how Bitcoin is, but it's on steroids. Bitcoin doesn't actually even have earnings. It doesn't produce anything. It's just, it's basically a very elegant piece of software is what Bitcoin is. Okay, so the most important thing, and let's do the stock of the day. The stock of the day is not really. Did I have Bitcoin on the screen, by the way? Just that's not what I wanted to do. Here's what I wanted to do. Okay, so just here's Bitcoin. It's above 17,000 now, and now let's get into the stocks of the day. It's usually a stock of the day, but we have stocks of the day. It's more like a list. See, it says list up top over here. It's my FANG-M list. Apple, Amazon, Google, Meta, Microsoft, Netflix, NVIDIA. These are the biggies, the heavyweights. These are the stocks that we talked about throughout the pandemic. Every show, when these stocks move up a lot, they take the whole market with them. When they go down a lot, they take the market with them because they're so big. They represent such a big chunk of the percentage of the components of the S&P 500 index. Now, for example, Apple is 6.5% of the S&P 500 index. You can't invest directly. You cannot invest directly into an index, but you could invest into a fund or a security that tracks or mimics an index. But here we have big moves. Apple regaining some lost ground. Amazon regaining some. I mean, Amazon's 96 like a week ago. Google up a little. Alphabet. Meta up a little. Microsoft up a little. Okay. NVIDIA up a little. Netflix. But you see these lines over here on the right side? I'm moving the cursor around by them. This gives you an indication of the high and low of how far these stocks have gone from their highs. You see all that red? That gives you an indication of how far they've fallen from their highs. So the fact that they had a nice day today doesn't really make that much of a difference, but I do think it's a rally that could be built up upon. Is that the right way to say it? We could build on it, okay? If we believe that the Fed is actually going to cool it with interest rate hikes. And why wouldn't you believe it? Because it just, Powell just said so today. So we believe it. All right. So the last thing and the most important thing I want to talk to you about is the bond market. You see all this red? This is yields going down. This is not a negative thing. Interest rates, okay, went down because bond prices went up. And a lot of these great deals that people were getting in bond yields are still there, but looks like they're gonna start disappearing. And now you're back across the board from 5 years onward, well below 4%. That is pretty amazing, considering how everybody was saying that interest rates were going to be flying higher. Now, it could be that the Federal Reserve does not want to see long-term rates go down so much because it's stimulative for the economy. It lowers mortgage rates and other common borrower rates. But nonetheless, if the Fed pauses, that makes bonds more attractive. So when investors buy bonds, the prices go up. It means the interest rates go down. So we're seeing in interest rates go down. We're seeing stocks at much cheaper valuations. And this is why I keep saying, don't get overly bullish. Don't sell out. Don't bail out completely out of the stock market. Because we go through these fits and starts, but we're building a base. And at this point, I'm going to call it myself and say we've probably seen the year low because the Fed has made this announcement. If the Fed didn't make this announcement, then it's iffy. But since the Fed did make this announcement, I think the lows are in. It doesn't mean that we go off to the races again. I said yesterday that a big mistake investors make is they're always buying the winners of the last bull market. Now, we could have a long sustained bull market, and I do feel that it'll be new stocks that lead the way, not the same Apple, Microsoft, Meta, Netflix, Alphabet, if I didn't say that already, and Nvidia. So that's my thought. I'm sticking with it. So that it was just a big day today for Powell to do this. This is so desired and so hoped for, and investors have gotten their faces kicked in every time they started to get optimistic that Powell would say what he said today, and it finally came out. And yeah, it's a good week. Today makes up a good, puts us into a positive week, and it's a good November. The major average is up like 5% plus on the month, so it's just an overall good thing. Let's talk more about this tomorrow. I think there's really not much else to say. One more thing. The railroad, the big national railroad strike, does look like it could be averted because Congress looks like it is now, and the president are working to come up with a package to say, no, you can't strike, which they can do. With the railroads, they can do that. And it'll just buy more time to bargain, to negotiate. But that was a big worry. So that worry looks like it's off the table now, too. So we've got a lot of good things to hang our hats on for investors that are pretty bullish right now. And again, this is why you don't just sell out of everything and say, oh, I'm just going to put all my money into 2-year treasury, paying 4% and hang out there for 2 years while the market falls apart. How do you know the market's going to fall apart? Don't make these market timing bets. You invest what's right for you. I mean, if putting all your money into 2-year treasury is right for you, then it's right for you. But for most of us, making all or nothing decisions, like all stocks or no stocks, isn't really a workable strategy. It's just a reflection of how emotional you are. All right. I will see you tomorrow. Thanks so much for joining me. Have a very good night.